Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn & Associates with your metals market update for this Thursday, the 29th of November, 2018. We're getting on to 2:40 in the afternoon, and I'm back. Still not feeling 100%. I think I caught a short-term flu of some type, and boy, I was at dinner Monday, and I got ill. And I'm back, though, so we're where we're at. Let me explain what your dilemma is in the market. You tell me how you want to play over the weekend and what you can play and how you have any idea how to protect yourself if you're wrong from the G20 outcome. That is the dilemma you have. You know, we went through yesterday two big events. You went through the Fed chairman's speech. You went through the Bank of England's how they are predicting Brexit could impact the economy. Hard, soft, medium, all the different ways. Now you've got to deal with the G20. Will the president give us a reprieve for a short while as he continues negotiations with China? Is he going to give you a hard deal? No, we're going ahead with these tariffs right away. The one thing I don't expect is a deal. I don't think anybody does. So the question is which one of those two, and the market's going to react sharply to which way that comes out. Very difficult. And if you think you can protect yourself, well, understand this doesn't happen during normal nighttime hours or anything. This meeting's on Saturday. You know how the leaks are going to go. Come Sunday, you'll be waiting for Sunday night when the market opens. If the market thinks it went one way or the other, you can get a sharp reaction. How do you protect? And that's going to be the dilemma people have. In the gold market, gold has gone fairly flat right now for the week. If you look at the weekly chart of just closes, you're up 70 cents. So this market has held itself in an upside bias, and the reason is it stayed over the 18-week moving average of closes. And if you look at the break lows on just a closing basis, you got higher. However, we don't know where this is going to go. We don't know if we're going to close higher this week, lower. It's a very difficult situation. When we take a look at the current chart formation, and we look at it like this is the bar chart, you had yesterday, not today, let me go back to yesterday, an outside day up when Fed Chair Powell gave an indication that we might be closer to neutral interest rates than he had mentioned back a month ago. The market took that to mean as maybe we are close enough where we don't have as many further interest rate hikes as we were thinking. That dropped the dollar, kicked the gold up. That's basically what occurred, and you had some follow through with that. Have we changed the swing line trend? No. You still have a pattern of lower highs, lower lows. Let's assume for the sake of discussion tomorrow, the market takes out 1234.50. You would then have a lower low and a higher high. That's all you'd have. You'd not be in an uptrend. You'd be out of a downtrend. Right now you're in a downtrend on the swing line, and the key number is 1234.50. When I look at the 18-day average and the 100-day, you know I was gone yesterday and the day before. I am certain that what I would have said at the end of Monday was, is the market going to challenge the 18-day average and find support at the 100? Problem is, you did, and then you turned the trend down. That means resistance becomes the combination on the next day of the 100 and the 18. The market went through those, and as you can see today, it's trying to stay above it. The problem for me is I still can't get that trend of an idea going in an uptrend, higher highs, higher lows. I can easily get bearish if you don't take out 1234.50 and you close back underneath the 100-day average of 1222.50, about $7 lower. When I look at the Bollinger Bands, which are an algorithm designed to keep the market trading within them 95% of the time, they are two things. Number one, temporarily they're far away. They may not be far away come Sunday night when we know what the outcome of the G20 result, not of the deal, but a reprieve, no deal, which way is it going? You're not as narrow as you were here, which often sets up a mini trend when you break out. Stuck sort of just watching that. And then, to complicate matters, you're overbought. Now, I define momentum in the slow stochastic as overbought is anything over 70. So I have an overbought market where the swing line's down. It's all countered because the bias is up and the market's over the 18-day average of closes. There's a different story with the ETF GLD. It's in an uptrend. It has higher lows. It's got higher highs. It's over the 18-day average, but it's overbought. But it's still a stronger chart than the futures, okay? GDX, if we step back here, let's go back to my last day that I was here, Monday. You have a higher high, lower low. If the market continues down, the lower Bollinger Band is support. Momentum is down, but you're not trending because of the higher high and lower low. Resistance, first resistance, 18-day average. Second resistance point, if you go up, this was yesterday, is the 100-day. And now you're back to the support area. Do you have a trend going? No. You still have the higher high, lower low, momentum flat, and you're stuck in the middle of no man's land. When I go to the gold-silver ratio, when I think the base metals are going to bottom, I look for this ratio, if you will, to start slipping because silver, in theory, is going to gain on the gold market. I'm not seeing that. In the silver market, here we are at the 1440 level at this hour. The bear side of the market looks appealing. The problem is if you get a reprieve of the deal, or word is that the president says it looks like they can get something done, his good friend C and he are getting along very well, well, you could easily pop over 1449 and be up here before you know what's going on. No deal, you might not take out that 49 and go right to the $14 level. It's a rough play. In the copper market, yesterday set the copper off because of Fed Chair Powell, not China. It can get a double whammy if something good came out of China, but it's not trending. You have a pattern of a lower low, higher high. Notice how the 100-day and the 18-day average are converging on each other right here. Don't know what that means just yet. I see no trend. I see a market stuck in sideways action between the Bollinger Bands. Momentum still has a bias to the upside, and obviously you're over the 18-day average, so I have that bias. So I have momentum up, bias up, no trend, stuck in between Bollinger Bands. The platinum market's the opposite. It's bearish. Lower highs, lower lows. Hit while I was gone. This is Monday. That's Tuesday's actually. Let me get to when I was gone. That's Monday. If you drop, this area could be the support. Resistance, the 18-day average. You're down on Tuesday. Now you're getting oversold too, so you got to be a little careful. But this is still the potential support. Now if you hit the 18-day average at 850, 880, you come out of the trend. You won't have lower highs, lower lows. Yesterday, the market drops down. Looks like it's going to fall out of bed, but it holds those areas, as you can see today. I'm not the only trader that looks at things like this, but I think I explain it better than most. When you come to the palladium market, you have the opposite. Not a trend, though. You've got a lower low, higher high, into resistance, market coming up. And the one thing we know about palladium is we're all nervous about where supplies of this are going to come from. You got South Africa, if I'm correct, Russia to a degree with it as well. Where are we getting it? Is there enough of it around? And that's what's kept this market strong. And if you look at it, it has done a pretty neat job most of the time of on big pullbacks holding that 18-day average of closes. Right now it's at a resistance point, narrowing in on an all-time high, but very overbought. In the dollar index, I wasn't here, but let's go back to Monday, the day I was here. I'm sure I said the trend is up, bias is up, momentum up. If the market keeps going, resistance could be the upper Bollinger Band. Support, if the bulls are going to support this market, 96.56. They don't want 29.5 to be taken out. Tuesday, the market rally, so now I'm looking at the resistance pretty hard at that upper Bollinger Band. It goes to it, turns itself around, goes right back to the 18-day average. How the heck did I know that was going to happen off Fed Powell? But it didn't matter. I know the pros are looking at that number from the way I teach charting. Doesn't mean I'm right on that, but the way that I teach, is that's what they should be looking at there. They should be looking at resistance the first time you challenge the market there. That's how I think they're going to look at it. Now you come down, this tells me the trend is still up. I have higher lows, higher highs. You don't want to see 96.29.5 taken out, but in the short term, momentum is turning down. Whoops, let me come back to that. And you can see it's still slipping as the market's fighting its battle. If you want to play that for the weekend, that's your thing. I talk about all this in our new futures trading kit. And I want to show you that we just created this. So the kit's going out today. First time it's been seen, and we've really revised, improved, added to it, done an awful lot. The main content you're going to see here as to what we do. You can stop and pause whenever you want if you're watching this. It says exchange brochures. It's a lot more than that. It's their mini courses. It's going to walk you through videos, quizzes. It does so much. Then, of course, my own charting course you can take at any point. But it's the chart patterns, all redone for you. Technical analysis, explaining it, putting our different brochures in there for you, all the different chapters that we have with things. You say you want options. Believe me, we cover options in detail. You know, one of the things people don't talk about is cause and effect. Example, we have this weekend coming up with G20. What's that going to do? That is a cause, and there's going to be a direct effect. But cause and effect often leads to the Fed, M1, M2, different rate hikes. What do they mean? Pausing. I explain it all there as best as I can. Then we have not only the pivot point, but we're adding our Rune index, something you even haven't seen from me new. I told you they're recorded. We waited for this first. We're putting this in it, and then I'll come out with that ad for you. How do you buy and sell? Why would you buy and sell? What do you look at? All part and parcel of this kit. I think you're going to love what you see. How do you get it? Either call my staff. It is free. You can go to our website, sign up for our futures trading kit, or you can click right up here. That'll do it as well. I'm Ira Epstein. You have yourself a good day, and I'll see you all tomorrow.